A very good morning to you all. Welcome to Tuesday. I hope you're all doing well today. Good morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Good morning. Seems like Q3 finally kicked in
Yeah,
with a
in a big
bang.
way. Yeah, this is pretty much exactly what we've been saying for the last week, that part of last week and into this week. It's sometimes you've got to sit back and let the market come out of a period of the end of month stuff and end of quarter stuff and see what it wants to do after that. It was really dead yesterday. Not really an awful lot going on. I was watching some of the levels we were looking at last week, like Kiwi at 62. It had regained that. Aussie dollar had tried to regain the sort of 60, below 68, 80 area. Euro dollar getting itself back above 104 and potentially something that looked like it could suck a few people in, being a low liquidity day, thinking, we saw all the bottoms last week and that's the end of it. And it's gone a bit peaked on this morning, mate, hasn't it?
Yeah, absolutely. It does look like somebody was waiting for the opening today, let 4th of July go by and then get the hammer out.
Yeah.
It's
But
really
go on, mate.
euro getting hammered, because if you look at dollar yen was putting in a high just before the European Open, and then now we're like 60, 70 points lower, and euro yen is two big figures off. And euro Swiss is making new lows. There's a part of dollars in there, of course, because of the weight and everything, but it really looks like somebody got the hammer out in the euro, and euro versus everything basically. If you look at it across, it's just euro getting hammered, and the rest following in the distance, likely because people just don't want a massive amount of dollar perhaps outstanding in the euro, so they're buying a few dollars back versus the rest. But I don't know, it really feels to me like a euro move, this one.
Yeah, definitely. You'll have to excuse us, folks, because I know myself and K-Man are in a few trades, trading some of these breaks, which we'll talk about shortly. But I am keeping one eye on my trading screen if I have to do any cutting and slicing. And I know Kay's been the same. So if we do pause for a few seconds, don't do anything, it's probably because we're trading. But let's get into it. There's not too much on the headline front. Couple of important points that I just want to raise before we look at the prices. Obviously, had the RBA hiking 50 pips as expected overnight. Nothing much in the statement after the details. They expect to do more, but they're data watching, risks here, so on and so forth, blah, 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 the usual line we've got from central banks. So they're continuing on the path. And I actually think perhaps that some of this euro business is being driven by Germany. We've got this worries about a big energy company, Uniper, potentially looking to be bailed out. And the Germans now running around with their asses on fire, trying to, sort out whether their industry is going to be in a bit of trouble. It could be a similar situation to the UK some months ago, where we had a lot of energy companies going bust because they got called out by the price hikes. Couldn't get them passed on, and all these cheap energy companies sitting themselves when the prices were low have now been flummoxed with all these massive price rises. So Uniper's a pretty big one. I think they're looking at something like 9 billion bailout potentially. So obviously you look for maybe a bit of contagion in that sign. But also we've had Bundesbank's Nagel putting a bit of a knife into the frag tool, saying that he doesn't understand why it should be the ECB or how they should come to the point of calculating spreads and what spreads they need to act at. I know you saw this one earlier, mate. What do you think? If we were going to get a bit of argument, you knew it was going to come from the Germans, and he's basically saying, why should we be paying for the others, and how are you going to manage spreads? What level are you going to start coming in at?
Yeah, and it's a bit similar to what we heard already from Prime Minister of Holland, Rutte, the other day. And it looks like basically the system is like core euro pays for the peripherals, And it seems the core are now starting, what I expected as well, starting to raise their hand and saying like, hey, wait a minute here. We've already been paying for the PEP. We've already been and doing all the kind of stuff for Greece 10 years ago, and now Lagarde is trying to get the core to pay for the peripherals again, and I think it's not yet a done thing as to how exactly the fragmentation tool will look like, and there might be some more discussions going on. And somewhere, in my opinion, this is part of what's happening now to the euro, because there was a bit of hope in how they were going to manage this fragmentation tool. People were hoping a little bit, but that bit seems now out of the window, and in my opinion, at least.
Yeah, I mean, this fractal shouldn't really be a big market mover, but I think
it should not. But if you start to try and pay for, let's say, the weakest side of, or at least on budgetary terms, on economic front, the more fragile or the more at risk side. It doesn't look good for the global picture, right, of the bloc. Yeah, and an investor, as we have been saying so many times, an investor doesn't like uncertainty. Certainly doesn't like uncertainty on the weak side of things. So it's probably just part of what we are seeing today. As everybody knows, I'm not a big Euro fan, so I'm short Euro crossers, but mainly. But it looks like this morning as well, the flows were sizable, quite sizable, because the 8 a.m. man we were talking about was rather a bit of a dollar seller perhaps in the beginning, or risk buyer, and then it got like absolutely reversed, but in a massive way. And 130 points in euro dollar in a couple of hours. You don't do that on just a few million euros. It is there's amounts going through there, in my opinion.
Yeah, I mean, I think the ECB have made a rod for their own back with this flag tool. They should have just kept their mouth shut about it until it was all ready to go, and just added it onto a meeting with Reading as a sort of, oh, by the way, we've got this. If there's any problems with spreads blowing out, we've got this tool. We have it covered. But they built it into such a big thing going on about it that's why the market's paying attention to it. And as you say, I don't think it's reacting hugely to this, but being this is the German ECB member, so this is a big wig coming out and saying this about the frag tool, plus this Uniper Energy News, plus the government is now creating a tool to pass on gas costs to all consumers. Apparently, it's like the walls got so many bricks in it, it's just toppling over. So I think that's one of the reasons why the euro is coming out. We have had the services PMIs from Europe this morning as well, which were the final readings in the main, and not really too much of a change there. The UK one was up a bit over the flash, bit of benefit there, and pound's probably the only currency not flipping out at the moment. So anyway, this is the mood we've got right now. You know, it's again, we can look at yields, point some fingers over there. Now the US was closed obviously yesterday, and this morning when it opened, yields opened back a bit higher, but they've suddenly all started coming down again, and it's not much different in Europe either. So mixing it all together, we've been going on about it, the recession fears, the growth fears, inflation fears, particularly for Europe. This gas situation generally is becoming a big deal. You know, we may be just kicked off into summer, but it won't be long before we run into winter. And if countries haven't got their gas stuff sorted out, then we're going to be seeing some big problems coming in. If Russia limits the gas as they have been now, and if things get worse even. I know the Nord Stream is being shut for 10 days shortly, I think, and there's worries there over whether Russia will reopen it after the maintenance period. So all the geopolitical worries still factoring into the markets. But anyway, let's get straight into it. And just a quick question before we do. I saw one from Lucas, I think it was. Let me go and find it.
While you're looking at it, there's Gavin mentioned something interesting as well, and I pointed that out in the chat room as well this morning. For one of the reasons why this euro all of a sudden fell out of bed is that Germany's trade balance went negative for the first time in 31 years since 1991. And I think that may be that may be a part of it, a part of what we're seeing here as well. We've seen that those trade balances have contributed to some moves. We have seen this in the yen as well, who went into negative trade balances for a while, and which contributed as well to some of the yen weakness. And I think it's a valid point as well. And that came out yesterday. Since it was 4th of July, and probably less liquidity. Those big flows were waiting to see, waiting for today's increased liquidity, if it is increased already, to hit the markets. But I think it's a contributing factor as well. Thanks, Gavin.
Yeah, cheers, mate. Yeah, so Lucas, cautious waiting for Bailey. Right, Bailey is going to be largely speaking about a financial stability report. It's just been released, I believe, at 10:30. So I'm not sure it's going to touch on monetary policy if that's what you're waiting for, Lucas. But it's gonna mainly be stuck on the financial stability side of things, I should imagine. But you know, we won't ever write off ever getting a comment on something that's going to move markets. But that's the main gist of the subject. We've got I think it's Temrero later on this afternoon speaking as well. So that might be something that's a bit more on monetary policy. Just something else, Stephen and Ollie saying you're hearing a bit of a buzzing or something. Is that just when we switch on, or is that constant? I'm not hearing anything my end, so if you're hearing it and it's constant, I'll
switch on your microphones, Ryan.
It's what, sorry?
It's kind of daily. It's when you switch on your microphones, it sometimes makes a noise. I've heard it regularly. So
is it happening today?
Well, I plugged in a bit late, but I suppose it's exactly the same thing. Yeah, for about a second.
Okay, it's only when I switch on. Okay.
Yeah.
All right. Okay, so it's not something that's constant. So okay,
it's good. It's waking up the the viewers.
Yeah, it lets you know I'm here at least. It's my alarm call. Okay, as long as it's not something constant, then I'll see what I'm not sure what I can do about that, but I'll have a look. Right, so let's crack into it. Two pairs I want to focus on now. One of them is obviously euro dollar, a bit of a big eat now. We obviously had this 2017 low that we've been watching for quite a while. We've got the break. That's what the low was back there, back in the end of 2016, early 2017. A level that by and large has had, you know, a couple of good tests of it, but now we're on the break. I actually sold this when it first broke down to sort of low 30s, bounced to 39, and I thought I'm going to try this one on the break. So I nudged into a short on that one. We're going to see where that goes. Bit of a hole underneath, really, particularly on the technical side. You know, everyone's going to be speaking now about parity. That's not too far away. We have got some. We're going to have some stop points on the way. I think it's largely going to be around the big figures. You know, so 103 we're hovering around at the moment. We had a little nudge under to I'm showing 102.97. Call it. 102 is probably the next point I've got on my chart, and I need to do a bit of honing up on this chart. I've got more levels on my other charts. But while we're under this level now, people are going to be looking at the parity calls, so expect them to pick up. It's going to be a big level, obviously, psychologically. From here, just keep an eye on the break level. For me, it's about that 103.40 now. Probably take that up to I don't know, something 45.50 maybe. You know, here we've gone all the way through 104. As I say, it looked like it would building above yesterday when not much was going on, but it's, you know, as Kay said, it's been a one-way trip, and we don't often get big moves like that coming out of nowhere. So back onto this 103.40 area as well, I'll be looking at maybe, sort of to the 50 area. If we get a test up there and we hold it, then we're potentially heading much, much lower. So that's what I'm looking at now. As I say, if we break this 103 handle, it's all, for me, it's just about seeing where it can go and where the levels are going to develop. If we get through 103 and that starts to resist as well, that sets us a new resistance point. I'm going to be slicing and dicing on the way down as we go, and see where it goes. You got anything on the tech front, Kay, you want to highlight for this one?
Let me put on my microphone, it will be better. Yeah, I have this, I have one, yeah, right here. There's a bit of a trend line we could make from, let me tell you from where,
do you want to take it quickly rather than?
Yeah, why not? I'll grab it and then I'll pass it back on to you.
Yeah, we'll ping pong it. There you go, mate. All yours.
Okay. Hey, you see this? Everybody can see me.
Yep. Yep.
This one here is a half parallel from the one here. Let me try to make it a little bigger and a little cleaner. This is the line that I'm talking about. And that comes in at around 102.60. Then I have another 102.30 in, which is a bit of a fib extension of this of the rebound, which could be worth having a look. And then nothing really before 10080. I really think this morning's flows are big enough to set the tone for the sessions to come, at least at the start of this third quarter. One of my favorite ones to watch, as I've been already talking about, is the differentials between the German and the US rates too. And if you look at them, this is this morning, this is yesterday afternoon, hovering around this like crossroad or traffic island around here, capped, and this morning we saw a big decline. And overlay them with the euro dollar, it explains 80% of the euro dollar moves that we've seen lately. So I'd say to everybody, it's one to look at. Thanks, Brad, for the rainbow charts. It's one to look at. On the Italy versus German spread, it's not moving a lot. I'm a little surprised this morning that we are not trading a bit higher after those German comments and last week's Rutte and everybody, but we are hovering. We're still above the 2%. That I think it's a bit of a psychological border. We've seen when it came back below 2% difference between the BTPs and the bunds. We saw the euro. That was the euro correction as well. And then we are here around this moving average, around this zone 205. It's not moving much, but if we start to tick up again, it's one worth looking at. Because it will add pressure to the euro, in my opinion, at least partial. Ryan, are you okay if I look at the euro CAD? I know you're in as well.
Yeah, no, you take it, mate. We've probably got the same picture, so
probably exactly the same picture. So this one is one we have been talking about and we've been watching for weeks and weeks and weeks. We've had this 1, 2, 3, 4, 5 tries to break below. Every time we got the bounce, every time we stopped in the 137 figure 60 area. So we were like getting ready for a break, and finally today we had the break. Overnight 133.93 low, bit of a spike up to 134.30s, and then as soon as euro started to turn, this thing broke as well. So what I've been asking the question, is it possible, and I think it is very possible, if we cap now below 134, give and take even 134.25, because if we would go above, there might be some short-term stops kicking off, but then we need to see if it holds or not. but call it a 134 figure 20 or so. And if it caps, it really, to me, it's a gateway to trade back down to 130 on this cross, especially as well that Europe, as Ryan already mentioned, is struggling with his energy imports and other issues that just weigh around Euro's neck. At the same time, OPEC is not getting its act together. Canada is an energy exporting country. Canada is also part of the American bloc. So I expect the dollar Canada, even if it goes a bit higher right now, I expect dollar Canada, if the dollar rises, to be slower than euro dollar going down. So I really think this now is a possibility of opening the gateway to 130 in the euro cat. So we keep a very close eye on that. I know that a good few of us are trading this in the room. It's what I consider a low risk, high risk reward trade, because we know exactly where our stop is. There is no ambiguity. It's 134, and if you wanna play around with it, which I'm probably going to do because I sliced small on the way down, is that probably my stop is not going to be below 134 and a quarter or so. But it's clear. This break and hold. It opens up a good few percentage of possible downside. So this is one we're in right now. I'm going to move over to the my Euromex. Yeah, I was off yesterday, so I didn't really updated it. But basically, I'm still short from this. As I said earlier, from this 21-27 break, I took some back. Then I started to re-short again last week on the pullback that we saw here towards 21.17, and now we are trying to get back below 21. I think it's a bit in line with what's happening in the Canadian dollar, although with different perspectives. But as you know, MEX is a real high yielder, and if things don't improve on Europe's side, and if, as ECB members are still saying that we are only going to go the first rate increase, we're only gonna get 25 BPs, compare it with a 7.5% currency. So as long as the European data don't completely, not European, global economic data do not completely crash away, because that would put pressure on the EM, whether or not interest rates are at 7% or anywhere else. We have to be careful on the emerging market front. But I think there is a valid case of retesting the 21. Perhaps go and have a look at these low 2090s again, and then see where we are. For the rest, I'm rather keep leaving the dollar side alone, because the dollar is trading quite strongly versus everything. But these 21 mid 2040s towards the 2050 zone in dollar mix may be a level to carefully watch. The other one that we are watching is this dollar rand, and dollar rand did some funny things over the end of the quarter, end of the month, and we broke above this 32-36 zone in quite some fashion. Went up to the next resistance, which is high 1640s towards the low 1650s. Right now we're hanging in the 40s. I'm not 100% sure what to do here. Looking across at all the dollars, they still seem beat. I want to see what happened, and perhaps the one to have a look at there is to keep an eye on the equity markets to see if risk rolls over or not. If risk holds up, this may be another perhaps interesting zone to try a bit of a short with a stop just above the 1650s. But I'm not going to advocate for anything specific right here and now in the rand. Yeah, another one I was having a look at this morning is this euro yen. Dollar yen shot up overnight. We couldn't hold below 135, 134, 40, 60. Really wasn't even retested, so it shot up overnight. There was an article out over the weekend saying that because we are going to have elections in Japan next weekend, saying that the ruling LDP party should still hold majority. It's mainly due to the fact that the opposition can't get more than 10 candidates, joint candidates together, and even though Japan is not particularly happy about the situation right now, it's a case of the opposition not being able to put anything together. But even so we shot up in the dollar yen overnight, but then it reversed quite sharply when euro yen got hammered. We are now broken below a bit of a trend line, 140.5. This 139.60.80, where we are hovering around right now, the low is 139.5 ish. Which is also a bit of lows here. Is quite important, in my opinion, on what's going to happen at the end of the day. If we are below this level here, we may be in trouble for a move lower. 137 figure a half perhaps is possible. Keep an eye if this closes below that 139.60 zone. We could see another percent lower perhaps.
City might actually have picked a winner in this one.
Come again?
City might have picked a winner in this one. They went short last week, I think.
They were short last week, and they got kept in for 2.5 pips. Their stop was at 144.30, and the high is 144.27.5 or so. They were speaking about this 137 actually, if I'm not mistaken, or 138. As a possible target. So yeah, they might be on to a win at this time. Or back over to you, unless somebody else wants me to look at something in particular.
Yeah, I'll take it back, and then we can always bet it back again.
Okay, my friend.
If need be.
Here we go.
Cool, thank you. Let's take that. So I just want to quickly go back to this Euro CAD, because, you know, I don't want this to sound like a victory lap or anything like that. But we were talking about levels and trading and timing and things like that. And it's really, this is, if you want a textbook move and a textbook how to trade a particular situation, this is it. I was still long this morning a little bit at 134.17, which I bought last week in the end of month stuff, and I was offloading it up here in this move up above 135. So I gave a bit of that back, and I was running the sell stops, as a lot of you guys will know. But you know, this is trading at its best when you have a definitive line that you can trade against, be it longs, be it shorts. And we were saying, if this breaks,
Ryan, we are not.
Experience has shown us that when you get a strong level like this, yeah.
Ryan, we are not seeing your chart.
Oh, what's going on there? Let's try again. See it now?
Better.
Yeah. So when you get strong levels like this, you know, you can only trade it two ways. You either lean against it or you go with a break. But the more times you get a test of a level like this, the chances are that if it breaks, it blows. So great, yeah, we're all on it. And as I say, I'm not doing this as a victory lap. Sometimes it doesn't work. Sometimes you'll get a little fake out, and it may come down 20, 30 pips, clear everyone out, and then reverse. You know, that's the luck of trading. But when you have these levels like this, you know, these are the ones you've got to zero in on, and you might have to wait a few weeks before you get your chances to, you know, sell at the tops or buy at the bottom. But these are the ones you keep on your notepad, you keep in the back of your mind, and you check the chart now and again, and you set yourself up to trade it. And you know, I want to pump the guys in the room. You know, this is our trade room on the Forex Analytics platform. Okay. And we keep this stuff going live. Okay. We don't allow people to come in an hour later and say, oh, I sold this and I bought that and I've just made such and such. Okay. Here we are. What's the time? 8 minutes ago, I took a slice off my euro dollar short at 81, and that moved just down to the lows. So we update this live. People are in here updating this live, what they've done. And it's all about learning how traders see the markets. It's not just about, oh, you know, here's what I've done, I'm so great, blah, blah, blah. You know, here's what I'm looking at for EuroCAD. I put in just before the show. So we've had the breakdown in EuroCAD. I had my stops. I've still got my stops at 134.20. I wasn't too sure about bringing them down yet. When am I going to start training them down? I'm fearful for a bounce. What I don't want to see is me bring my stops down under the break level. We get a decent bounce up to there. It triggers my stops, and then, funny enough, that becomes a high, and we go all the way back down again. So this is about how you manage a trade as we go through it, and we do this live. And Kay does it live, and all the guys in the room do it live, because it's all about trying to teach people what the thinking process is behind a trade. Not just to say, oh, I sold that and I'm making pips. This is how we trade. This is how I think every single day through every single trade. And it's putting that out in this chat room in our community. And as I say, here you can see everyone's doing it. Everyone's on it, putting their trades in, what they've done, how they got stopped, how they're managing the trade all the way through. And to me, this is the benefit of a community. It's about learning. So you guys and girls who are asking questions last week, you know, how do I deal with timing of a trade, or how do I deal with the mental side of getting in and out and managing? This is what we do every day, and we spell it out every day how we do it, how Kay does it. And again, I want to stress, it's not for pats on the back. It's not, you know, to pump our own tires. It's to show you guys and girls, this is what we do when you trade. This is how I look at it. This is how I manage it. This is how Kay manages it. This is how Blake manages, Stell, you name it. And also the people who are less experienced in the trading, they get it and they understand it. And that's why I'm very strong on the community thing. I'm going to end that sales pitch by putting up a link in the chat room for you, in the chat function. Just if you do want to come and join us in the chat room, then there's a link. Check it out there. Grab a discount off that link, and come and join us every day. But anyway, back to the chart. So, you know, we've looked at a few pairs. You know, here we have the Kiwi. You know, big level at 62. You know, as one of our viewers, Anne's been noting, a big multi-year level. You know, we had a break last week. Was it part and parcel of the end of month stuff? It looked to be. As I say, this was one I was looking at yesterday, thinking we're back above 62. Do I fancy, you know, buying a bit if we test 62? But I wanted to see what happens today and this week when the liquidity comes back. And, you know, I'm glad I didn't, because here we are and it's well under the level now. That's the area I'm going to be looking at as resistance, up into that 62, 62.20 area. If we can't break above that, we're potentially heading much lower. But overall, you know, we've got to see the US coming in. That's going to be another key point today, I feel. They've obviously had the day off yesterday, half day on Friday. What they're going to make of all this, I don't know. Are stocks going to get hit? Are we going to see this, call it risk off if you like, mood from Europe passing over to the US? And we've seen that in the US over the last couple of weeks, the worries growing there. So are we going to see a situation where what's happening today in Europe and the UK is going to feed into how the US reacts when it opens? You know, it's going to be some very important moves today. And this kicking off on the Q3, I've got a bit of deja vu. I mentioned it to Kay. We've had these periods, these half years, where we've had these big moves after we've crossed over the line. So it's going to be important now. If any of you guys got anything you want to talk about, let us know in the comments there. So I'm just keeping an eye on what the markets are doing. Right. Kay, you got any pairs you want to look at quickly, or I might let these guys and girls go?
Yeah, there was one mention of Canada yen. I can have a quick look at it because it's indeed kind of interesting what happened there.
Yeah, go ahead, mate.
All right. Share. Okay, here we go. Yeah, this is the Canada yen. Indeed, we have this bit of a trend line which has been acting as a bit of a crossover line. We saw it held a couple of times, and then when it broke, it came back down quite a bit lower, came back on the prior low, then bounced, came back to the trend line, and now we are back lower. So Canada, in my opinion, as I'm also short Euro Canada, I'm also not a big fan of being short Canada right now for as long as energy holds up. It's more of an energy play than really commodities play. That would be more down to Aussie, Kiwi, and maybe somewhere China also. But yeah, Canada yen capped around the resistance trend line here, and then started to look lower again. Pretty cool level around 105 the figure. If it would go, 104.30 is possible, which is also 104.20.30 is also the prior lows. So yeah, pretty. I think we've got like two big figures to play inside here. If it breaks here, back here, we might have another look down to mid 103s or so. So yeah, Canada yen is interesting for as long as the yen side doesn't go balloony on the other side. I'm not a big fan of being long yen still, because I found the elasticity, especially of the dollar yen, still quite amazing. There was a lot of there were a lot of reasons or a lot of possibilities why end of last week with lower yields and etc. The dollar yen would trade lower, but we couldn't even go and test the 134 40-60 zone, and which in my opinion is a bit worrisome for no, this is dollar cat. Is a bit worrisome for those people who want to play yen long on a more medium-term basis. I really think we need to get back under this 134 quarter and a half, call it 134 quarter and a half, to really turn this around more aggressively. That is my opinion on the yen. As long as we do these lows and these tries low, and we then all of a sudden find ourselves this morning 150 points higher from Friday. Of course, it came off today, but I think a lot of it has to do with euro yen and yen process. This is one I'm a little reluctant to stay long yen for more than a session or two. I was short dollar yen a couple of times over the past sessions, but then over the past week, we've also hit that high really nicely in our room as well, trading it on the way down. Tried again end of last week to get short, but then the fact we can't even go there and test it makes me a bit reluctant to stay long yen for longer than hours or a couple of sessions. So if I would be in a yen pair short, apart from perhaps euro yen, I would watch the clock a little bit and see really what happens on the yen side of things. Yeah. Oh yeah. One thing that I wanted to mention though is that financial stability report, the Bank of England financial stability report. Let me share another screen. Here, this is if you allow me to quickly share the live stroke screen, can I, Ryan?
Yeah, go mate.
Okay, those few lines here. The global economic conditions have worsened. This could put pressure on the finances of households and businesses. The outlook of the economy is very uncertain. Businesses can still access market funding, but improving market resilience is crucial. The financial stability report was a bit cautious, in my opinion, by the Bank of England, and we saw indeed that the cable is trading a little weaker. So I'd be a bit cautious there on the sterling side of things if I were everybody.
Yeah, it's always designed to be cautious because it's about financial stability. I mean, he's come out with another no shit Sherlock comment. Said here that commodity markets retain significant risks. You know, if you're not knowing that right now, then he shouldn't be in a job. But anyway,
it's
always going to be glass. It's always highlighting the risks. That's what the financial stability report's all about. So
that's since the start. He's been on since the start. I've been saying this is a central banker where you have more chances to make money when you're short sterling than long sterling. It's just to put it, just to make my comment politically correct. I usually say something different, but usually I just want to keep it politically correct since we recorded.
Yeah, I won't hold back when talking about these clowns.
He's probably the worst central banker I've seen in a long time. And there's many on the list, but he's a bad one. He's a really bad one. Cable. This 121 and a half. The 55.65 that we were talking about earlier on the cable, 121 55.65 did his job again yesterday. We went to test it. We've seen tests here. I've always been watching this level since actually even before May. I think this 121 55.65 is quite a good level to use as a barometer for the cable in the low 120s. If we dive back below 119.70, it could be really bad news, right? But that will, I think, depend on what happens in the US this afternoon. Which central banker comes close to Bailey's incompetence in Cable's opinion? I think Lagarde is not bad.
It's a close race. It's a close race. We have to say that.
It's a very, very close race. If she wouldn't have the suntan that she has, I think she might be the worst one. But her suntan puts her clearly one step above Bailey because that's unpayable. Her suntan, right?
If you want entertainment, watch the South African Central Bank press conference. What's his name? Mr. Shouty?
I don't recall his name, but he's the best central bank. He should get the award of the most the funniest central banker at least.
Yeah, he shouts his press conferences. He's a funny one. But anyway, let's not get into. We can do a whole show on slagging off central bankers. Yes. I've got one for you, mate. Nick Shah wanted you to look at an inverse shampoo on the Dixie.
On the Dixie?
Yeah.
Okay. I mean, all right. Shall I say it again?
Yeah, go on. Give the disclaimer.
Okay, guys, I'm not watching Dixie. This is my Dixie chart. I've tried it once. You see, is it on the what? On which period?
Left feet on the 4 hour. You've put some text on a Dixie chart. Oh, you've changed, mate.
No, I mean it was probably just to test my trading view. No, for the listeners, I'll say this only once, and I know that 90 or 95% of the retail trading community is watching the dollar index for measurement of the dollar strength. To me, the dollar index, and afterwards I'm really going to shut up about it. To me, the dollar index is a result of, not a driver of things. for the simple reason that that the dollar index is 55 or 57% euro dollar, and the rest is a lot smaller when we take into account what the composition of the yen is, of the sterling and things like that. And I must say that, and I know I'm going to disappoint a lot of people in saying this, but I really do not measure dollar strength or weakness by what is happening in the Dixie. The Dixie is the visual representation of dollar strength, whatever. But then if you overlay it with the euro dollar, it's virtually what it does. So yeah, I can see this one here, inverted head and shoulder, shoulder, head, shoulder, knees and toes, and yeah, 106 and a quarter could be breaking, and we could be trading higher, but then we could be saying the same. If euro dollar supports here and we go back to 103.40, it's probably gonna be around 105.80 again, which is the prior top. Will it bounce off it? Possible, but then it's equally to saying that euro dollar could be capped at 103.40, right? So that far for the Dixie for me. I have to apologize towards the audience, but I'm not a Dixie pusher. I'm only a big fan of the Dixie chicks, as Mike says. Yes.
That's exactly the reason I gave it to you, mate. Because I share the same views on the Dixie. It's not a leader of anything. It doesn't show you where anything's going. It's just a representation of a basket. And the hard thing is trading it. There's not that many contracts this side of the pond that offer decent trades on a Dixie as a CFD. Certainly not in that sense. You can get a few on the futures, but I don't know if it's different in America where you've got decent contracts to trade, but certainly over here there's not that many, so you can't even trade it if you wanted to tech it. And secondly, I'm not a head and shoulders man, so that's another reason why I booted it to Cayman.
I like a cool head and shoulders sometimes. I kind of like it, and in the euro dollar from 117, there's actually one that played out really, really, really well. But it's I for sure. I mean, to be honest, yeah, I'm not even looking at Dixie, and I'm sorry towards our audience, but I don't even chart it. But I know many do. So please, if it works for you, it's for sure something. Anything that can help you trade better is a good instrument. But we need to find ours, and each of us have to build it in. And it's also something which I want to really stress here again. People look at everything and anything and everything. Instruments and technicals, fundamentals, whatever. But trading is like going to the restaurant, and you look at the menu, but it's not because you look at the whole menu that you have to eat everything in the restaurant, right? So I mean, we use stuff to help us to trade other stuff, or to trade that particular instrument, but we are not. Or at least I am not, because I see a moving oil. I might be trading Canada, or I might be trading other stuff. If I see a moving commodities, or in China, I might be trading Aussie and Kiwi, or the inverse. But it's not why we look at something that we have to trade everything, right? Yeah, that's exactly it, Brad. I'm looking a lot at correlations to trade something else. And
yes, because if you end up looking at the correlation, like if you're trading dollar CAD and you're spending half your time watching an oil chart, just trade bloody oil. That's one thing I say. You look at it as a potentially what's helping the wind blow, which direction. But if you focus too much on the other side of the correlation, just trade that instead.
That is true. That is true. But I do look at correlations to trade stuff because it influences what I'm trading, right?
Yeah, exactly. You know if you're fighting pissing into the wind or pissing with the wind, as we say. So Nick, could you also say the same for equity indices as their baskets of shares? Not really, because an equity index is still within that country or currency. So Probably one where you could maybe look at is the FTSE, which obviously has a lot of multinationals in it, and that can obviously be affected. You can see the FTSE moving purely on what's happening in cable. But generally, the basket of shares is one country, so it's one economy, if you like, and one set of fundamentals, whereas the Dixie is many different countries and currencies, so it's a bit more messier.
What I would say historically, because we have to make a distinction between something like the Dixie, as you rightly say, Ryan, and stuff that we had 30 years ago, which was the ERM, the European rate mechanism, or the European currency system, which is a basket of all the currencies in the same zone. So and I've been trading a lot of EQ basket in those days and ERM trades, because they're all part of the same zone, and we traded the differences between what was happening in one zone and the other. But the Dixie is a bit more complicated, especially with the huge difference in weight between euro, dollar, and the rest of the currencies versus the dollar.
Yeah, cool.
Okay,
well, let's go on. Did you want to have one? You got something else you want to look at?
I'm just as people were saying in the room as well. Keep an eye on 37.90.95 on the S&P. It's a bit of a level here. It's a low is the low from yesterday when the futures were open. Keep an eye on that one. The other side, 38.30. But I would rather look at 38.5, 50, 55 really. 38, 50, 55, 37, 90, 95 is the range that I'm looking at the S&P to start to properly start Q3 in the Americas a bit later on.
Yeah, cool. So that's it from us today. Sorry, I'm keeping an eye on euro dollar, whether it's going to do a decent hold under 103 here. Yeah, we've had some breaks, so scale your charts, particularly in euro pairs. Look at where the big levels may come up now if you're not in a trade, or you're looking to get in, or if you're in a trade and looking where you want to take your pieces out. Let the price action develop. Let it develop the support points. Confirm the support points before you want to try catching any knives or counter trading, that sort of thing. As we spoke about again last week, look for reasons to counter trade, and the price action can be that reason. If you get a series of lows put in place, and we can't get through it for any period of time, that's where it gives you a bit of conviction to try and fight the trend. But otherwise, yeah, hope you trade safe today. Hope you make bundles of pips. We'll be back tomorrow. We'll have the 8-cap crowd with us again if some of those guys and girls aren't with us today. Watch out that US session open. I think it's going to be important and could be a bit of a decider for some of these moves, whether they continue or reverse when they open and come back to full trading. Thank you very much, Kay. Thank you to all our viewers. If you do like the show, please look out on the social medias. Give us a retweet or a thumbs up. Don't forget to hit us up for the NFP competition. You can find that on the forexflow.live blog, and I'll retweet that as well. You can win a free month, or 3 people can win a free month each on the Forex Analytics platform. I'm going to get my head back into trading, and we shall see you tomorrow.
Have a good day, week, month, Q3, guys.